Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. I hope you're having a fabulous day. There's some good news has come out yesterday. We had those senior commerce secretary meetings in Beijing, and China and the United States seem to have achieved some kind of breakthrough, and we could actually be seeing something substantive. It's all been window dressing and not going very well for quite some time. So two working groups have been formed, and one will be driven by the commercial sector businesses, business leaders, and the other will focus on the export policies of both nations. And the first meeting is actually expected to occur as soon as today. So that's what I mean by pragmatic, and in fact that was the word used by the US Commerce Secretary. So real movement forward, but it will take time for any improvement in actual trade, business relations to begin to impact in any way at all. So very nice, positive news, and it's long overdue, may I say, as the world as a whole, really holistically, has moved away from globalization. Well, the West has moved away from globalization, and China to some degree, but BRICS, of course, is moving towards its own form of globalization. Oh, by the way, BRICS already represents a quarter of the world's trade. So BRICS is getting very strong indeed. Of course, the Western alliances still dominate, but I actually think the world has already changed. People keep talking about the world will change. I was talking about that in 2009, 10, 11, which is why I was invited to address APEC in Vladivostok in 2012 and rub shoulders with Hillary Clinton, etc., etc. And that was because back then I was forecasting there will be three equal economic regions with equal diplomatic, political, and military power. And that they would be the European Union, the United States, and China. And that's certainly the world I think we already live in. I used to say back then that the only emerging economies are in Africa because Asia has already emerged. And I was saying that a decade ago, and some people will still refer to Asian economies as emerging. And the same can be said of much of Latin America. And now, finally, I didn't even really call Africa emerging back then because it still had such political and economic dysfunction that it wasn't really going anywhere too quickly. Now, Africa is making strident moves to at last develop the independence that it deserves economically and politically, as should be the case, in the same way that China should be a superpower. I mean, it's 20%, 21% of the world's population with a modern industrialized consumer economy. How could it not be a superpower? So those who've tried to stop the tide basically coming in, which is what's been happening throughout Asia and Latin America, seem to be dismayed. But of course, it's just the natural forces of life and the world moving forward in a more balanced way. And now it's good to see that Africa is starting to make similar moves. And obviously a lot of the resource wealth of Africa has been taken at a too low a price for so many years. And obviously that's going to be changing soon too. And I applaud those moves in that direction by African nations for greater independence and a more appropriate level of compensation for the many resources they deliver to the rest of the world. So that's good news that China and US are re-establishing more proactive, hopefully positive relations, but it will take a little time, as I said. Meanwhile, in the European Union, we saw the data there for new lending growth just continuing to plummet. It's been plummeting like a very steep collapse rollover for quite some time, growing just 1.3% in the latest data. And that's the kind of numbers we saw during the sovereign debt crisis. So when the banks were closing, there was a sovereign debt crisis and nations needed rescuing, that's the kind of lending growth that we're seeing now as it was then. So really a diabolical state of affairs that only points to a further significant slowing of the European Union. In the US, of course, we just had further confirmation of the manufacturing recession there. The Texas Business Activity Index for manufacturing minus 17.2, not quite as bad as the previous month, but all these negative numbers are bad, and it's just a sea of red contraction for the manufacturing industry in Texas, which is particularly hard hit. So it's a national phenomenon, but Texas is particularly hard hit. And as we know, Texas is a significant economy in its own right. So still troubles ahead in the US economy at that Main Street level of activity where it really matters, upon which, the pack of cards of the financial markets are built. But those financial markets in their ivory towers in Wall Street sometimes forget this, much to usually their own pain, as in the GFC, until of course they get the American taxpayers' dollars given to them by the government in power on the day. So it's all still quite a dysfunctional US economy, may I say. In Australia, we saw retail sales yesterday, and it was a fabulous headline number, wasn't it? That was very impressive, up 0.5%. Unfortunately, not fully, only partially retracing the collapse of the previous month, where retail sales fell 0.8%. So we're down 0.3% over the 2 months, averaging 1.5% a month down. Over the last 6 months, we're averaging 0.1% up. So basically, retail sales are stagnating in Australia and really experiencing crisis management in most retail businesses. So not a good outlook there. Restaurants, cafes bounced a little bit, but really about 1.3% or something. But that bounce in restaurants and retail sales was more about having lifted their prices. So that's actually a warning sign, because the bounce was so small, that in fact volumes of customers are declining at restaurants and cafes. So this still fits with my recession warning for the Australian economy going forward. And I would think if you're a business manager, by now you've already made the decision to be a little bit cautious, but perhaps grow market share where you can, particularly, as there will be some distress in every industry. And I always think that downturns should be viewed as an opportunity to grow market share. It's much more difficult to grow market share during boom times when everyone's doing well and doesn't want to sell or exit the marketplace, whereas in a downturn you have the opportunity to purchase competitors at a very competitive price. That's the nature of capitalism. So yes, I'm still forecasting a recession for Australia, or, sort of flatlining economic growth that flirts with negatives here and there in the quarters ahead, much the same as the United States and for Europe. Yes, try to see it as an opportunity. Of course, in financial markets, we've got every opportunity to take advantage of such volatility in economies and in financial markets. Equities on the day, yes, as forecast yesterday, they did have a rally in Wall Street last night. Yes, that rally looks a little firmer than the previous bounces we've seen. So there is more of an argument for the bulls again today, this Tuesday. So perhaps some follow-through buying to the upside, but may I suggest to you that follow-through buying absolutely has to happen. If the market at all falls back in on itself on this Tuesday trading session, I would be a little bit surprised, but encouraged very much in my bearish view. I hope all of this helps and you have a great day. Thank you very much.